All right. Hey, everybody. I'm going to go ahead and get started. Thanks for coming. Thanks for being here. Dave, thanks for having me. As Dave said, I'm Jeff Gibby. I'm going to go ahead and read a legal disclaimer because I'm required to. So we'll start there. Today's demonstration is designed to instruct you on using MetaStock and the accompanying software plugins. It's not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. MetaStock and its employees shall have no liability for any investment decisions based on the use of the software, any trading strategies, or any information provided in connection with the company. MetaStock and its employees do not endorse the purchase of a security, nor are they paid for the promotion of a security. No information in the presentation today should be construed as investment advice or the solicitation to buy a security. So there you go. Let me introduce myself real quickly. My name is Jeff Gibby. I've worked here at MetaStock in March. It's going to be 30 years, which is pretty crazy, actually. I started basically in inside sales. That means if you had questions about the software and how we could improve your trading, or if you're having problems with your trading, you might be contacting us and I'd help you with that. For the last 20-ish years, I've kind of had a lot of different roles, but a lot of them is working with people like Fausto and Dave and a lot of our online stuff that we do. I'm all in charge of that. I've had the chance to work with a lot of people, and it's a job that I absolutely love. So I do want to tell you, if you have questions, type them in the chat. If you have symbols you want to look at, type them in the chat. I do pay attention to the chat, and I try and make sure I answer all of the questions. I am here today with a couple of goals. I'd like to teach you something. So we're going to start a little bit with that. So I'd like to teach you a little bit about how to use MACD, why trading with a technical trading system is important, give you a good example of one using MACD, and then just kind of talk to you about how you can use software to help you evaluate that. So I hope you learned something today. Certainly that's one of the things I always try to do, is actually teach you something. The other thing that I want to do is I want to get you interested enough in MetaStock to do a trial. So we're going to try and accomplish both of those things. And again, if you have any questions, let me know. I'm not going to read this slide, by the way. I will talk a little bit about MetaStock as we go. One of the things I'd like to talk to you a little bit about, one of the things that we're very, very proud of as we get out of the gate, is MetaStock has been rated the best software in its price category for 33 years in a row, including this last year. And for me, it's just the tools that we bring to the table. So much better than some of the online solutions that are out there, full market scanning, all that kind of stuff. So here's what we're going to talk about today. And again, if you have questions, let me know. And I believe I'll be able to see it. I want to talk to you a little bit about the importance of trading plans. To help you understand exactly what I mean by a trading plan, I'm going to walk through Gerald Appel's famous MACD indicator. I'm going to show you how to test it. I'm going to show you how to scan it, how to decide if it's the best indicator, all that kind of stuff. So let's go. As we get started, I want you to know that the first person that answers this question correctly is going to get a free book. So go ahead and answer. What is the best profession, do you think, for trading? Is it A, a teacher educator? Is it a B, an engineer or an architect? Is it a psychologist or a psychiatrist? Is it a pilot, a performer, an artist, or musician? A, B, C, D, E, F. And if you get the answer correct and are the first person, I will go and mail a book to you. The book that you're going to get is going to be High Profit Candlestick Patterns by Steve Bigelow. So go ahead and guess it. Let's see if something comes in. I should be able to see if somebody comes in. So, and as you're kind of talking through this, I think there are answers that are correct. I'm not getting a lot of answers just yet. Sometimes there's a bit of a delay there. But I'm gonna go ahead and give you a chance and an opportunity to win this. As I've had the chance and the privilege and the opportunity to work with a bunch of traders over the years, and a bunch of really good traders. Okay, we're starting to get some answers in. Dr. Bob Fisher says F. Quite a few of these actually kind of resonate as being true, or maybe things that might be good. over the years, we've worked with a lot of psychologists and psychiatrists. There's two that come to mind as people that I've really looked up to that trade well and kind of have a lot of that have had an influence on my trading. The first person that comes to mind as a psychologist or a psychiatrist would be Dr. Jake Bernstein. Jake Bernstein is somebody that traded his very first trade in the 1960s. He's written tons and tons of books on the subject of trading, and a very, very prolific trader. Looks a lot at seasonalities and very simple timing methods to help you get in and out. Always has a setup, a trigger, and a follow through. It's kind of the mantra that he uses. Very good trader. So that might be one. Another person that's a psychologist or a psychiatrist is the Dr. Alexander Elder. He wrote Come Into My Trading Room. Super great technician. Very, very good book as well. And he was also a clinical psychiatrist as well. So that might be a good answer, but the actual answer that we're looking for is Pilot. And there are a couple of people I know that I've worked with over the years. Chuck Hughes comes to mind. Greg Morris also comes to mind. Greg Morris started his career running a company called Computer Asset Management. He ended his career just a few years ago, retiring after he had managed about 19 point something billion dollars through Stadion Asset Management. He was also a pilot. And the correct answer, which Bob, you win by default because you're the only one that put in an answer. So I'm going to send you the book, but the correct answer was Pilot. And I do have your email address. I'm going to just copy it to the clipboard real quick here, so I have it for later. But over the years, I'm opening up a notepad as well. Just put it here. Over the years, I've kind of wondered why Pilot in particular. And for me, I think it's discipline. I think discipline is really important in trading. Discipline is something that a lot of people lack. I think discipline is the real key reason. Obviously, if you're an airline pilot, when you go to take off in an airplane, you have a very specific, Michael, there you go, pilot because of the checklist. That's right. Dr. Fisher says he happens to be a professional pilot. That's amazing. That's really cool. Thanks for well, I'm glad you won the book, Dr. Fisher. Yeah, because of the checklist is exactly right. Every time you take off, you have a very specific set of rules. Every time you land, you have a specific set of rules. If there's emergency, you have a specific checklist of things that you do. It's a very disciplined profession. I believe that's why it was part of that article as the best profession to be in. If you're not familiar with Richard Dennis, the guy that's on your screen right now, Richard Dennis was called the Prince of the Pit. And this, he borrowed about $1,600 and reportedly made it into about $350 million in about 6 years. He was a famous trader, obviously, in the 1980s. He had a friend, Richard Dennis had a friend whose name was Bill Eckhart. Richard Dennis believed you could teach trading. If you've heard of the Turtle Traders, he's one of the original turtles. He believed you could teach trading, and he and Bill Eckhart basically recruited and trained a group of about 23 traders. They were known as the Turtle Traders, funded them with their own money. There was 21 men traders and 2 female traders. And initially, in the initial group that was in there, they brought them in, they taught them all their rules, and they had one of what was considered one of the most famous trading experiments in all time. Over the course of about 5 years, they aggregated a profit of about $175 million with these traders. And what he would always say, or what he said, his quote, it's right on the screen. I always say you could publish my rules in the newspaper and no one would follow them. The key to trading is consistency and discipline. There's a lot of quotes that kind of come to mind. One of them that I just read was basically, if you can't follow your own rules, you're not a trader, you're a gambler. That's paraphrased, and it's from the great late J. Wells Wilder. Let's go ahead and kind of just talk a little bit more about a trading plan. I do believe discipline's important. What I want to get through to you, and what I want you to understand is how indicators work and how indicators can help you contribute to a trading plan. So, and again, if you have questions, I don't have a lot of symbols pre-pulled up. So if there's stocks that you want to look at, type them in the chat. We'll look at the symbols that you want. For me, it'd be very, very easy to kind of pick out some stocks that look great and put them up on the chart and say, hey, this is all you need to do. But I'd rather just look at the symbols that you're interested in and look at those. The methodology that I wanted to talk to you a little bit about today is the methodology that's based around the MACD indicator. MACD was created, as you probably guessed right now, by Gerald Appel. He developed it over 40 years ago. Gerald Appel died in 2020, but during his career, he became famous for his MACD indicator. He wrote 17 books on investments. He published a newsletter that ran continuously for 46 years called Systems and Forecasts. And I think this is interesting and not important at all. But he also wrote 5 books on photography. So he's the creator of the MACD. And the reason I like to talk about the MACD is a lot of people use the MACD, but as I kind of have talked to traders over the years, MACD is a very popular indicator. A lot of people really don't understand how it's calculated, how it's used, all that kind of stuff. So I want to talk to you about how it's calculated, how it's used, and the 3 main uses that you can use. You can use MACD in a bunch of different ways, but there's 3 main uses I'm going to talk a little bit about it with regard to the MACD indicator. Some of the advantages of MACD is you can see it's like objective, so it's not subjective. I love technical analysis because it's the study of the chart. Everything that we're going to talk about today, whether it's a MACD buy signal, overbought, oversold, divergence, is objective. We're not trying to guess what's going to happen with gas prices, the Strait of Hormuz, the Fed talk today, all that kind of stuff. We're studying the price. We're looking to find stuff that's objective and not subjective. It's easily interpreted. Hopefully, if I do a good job of explaining it to you, you'll understand it. And it helps you. When I started talking about MACD, I misframed it a little bit. MACD is a trend indicator, but as we're going to talk more, this also helps you measure the momentum in a trend. So it does help with trend. It has a built-in method of helping you understand if you're bullish or bearish on the stock. It also helps you understand if you maybe have too much momentum. It does a really good job of looking at momentum. There are some disadvantages to it. It's prone to whipsaw. It's based on moving averages. It's lagging as well. So let's go ahead and kind of dive into it a little bit. One of the things about MACD, we're going to talk about how it's calculated, how it's constructed. I think it's important to understand how it's calculated and constructed, especially if you're going to use it. When Gerald Appel developed the MACD, he didn't use whole numbers. He used 0.075 and 0.15. Those were the numbers that he used. Those don't line up exactly with whole numbers, but the closest whole number moving averages that he used was 26 and 12 exponential moving average. Those are the 2 that he used. Do you guys have any symbols for me? If you do, let me know now. We're going to jump into the chart. We're going to talk about the construction of the MACD right now. And I do have a chart of the SPY open. We can start there. Since you guys, it's a quiet group today. But we'll go ahead and start right here. If you do have a symbol you want to look at this with, let me know. If I wanted to tell you how to calculate a MACD, the first thing I would do is I'd come into the MetaStock, the indicator quick list here. There's a few hundred indicators. I'd come into the moving average. And what I would do is I would put a 26-period exponential moving average on this chart. I'd make it a little bit fatter so you can see it over the internet. And red's fine. We'll go ahead and leave this on as a red line. I grab that same moving average and I just do a 12-period exponential moving average. And let's make this one blue. Yeah, blue. And I'll make that a little bit fatter as well. Okay. I'm going to grab the MACD. I'm going to just search for MACD here. It's really helpful when there's hundreds of indicators to be able to find the one you want real quick. And that was pretty quick. I'm going to go ahead and plot this on the chart. While I'm in here, I'd like to make things really legible and very readable. So I'm just actually, I don't want to use this indicator. Forgive me real quick. I'm going to come back here. And the one I want to use is MACD histogram. Let's go ahead and pull that here. We'll put that on the chart. And the only difference is it has a histogram, which I want to tell you how that's calculated too. I'm going to go here. We'll make it fatter. Make it fatter. We'll even make the histogram fatter. Okay. So we're going to talk about all three of these lines and how they're calculated. The first one we're going to talk about this one right here is just a MACD, the red one. Okay. If I wanted to tell you how to calculate the red line, the MACD, all I would tell you to do is to take the value of this shorter term moving average, the 12 exponential, and subtract it from the 26 period exponential. You subtract those. The difference that you get is going to be this number here. Okay. I already think it's important that you understand that when you're looking at the MACD, you're looking at a comparison of two moving averages. Because if you understand how moving averages work, there's some lessons that you can inherently learn from that. The first one is, let's go ahead and go back a little bit here on SPY. I'm just going to scroll out here. If we're in an uptrend, the shorter term moving average is naturally going to become above the longer term moving average, which means that your MACD number is going to start to rise. When that MACD number is rising, that means you're in an uptrend. As it kind of, if you're in a downtrend, the shorter term moving average is going to fall below that longer term moving average. And that means that the MACD is going to decline. Fairly straightforward, right? Easy to understand, easy to look at. If you're in an area that's kind of flat, and I'm going to call this area that we had right before, we had the bit of a pullback, we call this a flat area, but if you're in a flat area, the distance between the two moving averages is going to shrink. This is how we start to look at momentum on the chart. When that gets skinny, your MACD is going to be shallow. And when you have an explosive move down, if you have a very, very accelerated move down, you're going to have a sharp move down. And likewise, when you have a sharp move up, you're going to have a sharp move up on the MACD as well. So when you're looking at MACD, you're looking at a measurement of not only trend, are we headed up, are we headed down, but you're also looking at a measurement of momentum because you're comparing a longer term indicator with a shorter term indicator. Oh, okay. Bob says there's no chat. Yeah, okay. If you have a question, let's actually hit the questions box. You can type in a question. I will see that. And Bob, I do see what you said. We'll go ahead and switch over to SLV right now. Let me just, we can look at SLV. Okay. So that's pretty much it. And we can kind of review what we just talked about. Here is we have this huge, this was fun. I loved it when the metals were shooting up. But when we had silver just shooting up, you can see where we spiked up. Then we had the deep drop down. It came down real fast. It's a measurement of trend and momentum. That simple. You're comparing, with this red line, you're comparing the difference between a 26 period exponential moving average and a 12 period exponential moving average. That's it. It's not magic. We'll talk about the other lines, and we'll start to talk about how Gerald Appel actually recommended you look at them and kind of the three common uses for them. So let's go through the other lines. This right here, this blue dotted line, that's what Gerald Appel called the signal line. Called it a signal line because you can actually use it to get buy and sell signals on a chart. The signal line is a 9-period exponential moving average of the MACD. That's it. If our MACD is above its signal line, then you're going to say that the MACD is in a bullish phase. If it's down below its signal line, like it's right here, you're going to say it's in a bearish phase. So you can kind of see, you can see bullish here, bearish there. I'm going to attach, in MetaStock, we have an expert advisor. I'm going to actually attach the MACD expert advisor to the chart because it helps me illustrate exactly where this goes bullish and bearish. So what I'm going to do right now is I'm going to click on the expert advisor. I'm going to click on MACD. I'm just going to click on this MACD by MetaStock. We'll go ahead and attach that to the chart. I'm going to move this trend ribbon down a little bit down here. I just like it a little bit better right here. But you can see when we go above our signal line, we get bullish. You can see where it's bearish. You can see where it kind of oscillates between the two as well. Okay, very, very straightforward. Now, the reason Gerald Appel called it a signal line is, and I'm going to zoom in a little bit here on silver, like right here is where we're going to look at it. But when we cross up above our signal line, you'll notice that it paints a buy signal on the chart. The reason it plays a buy signal on the chart is we're going from bearish to bullish. If we switch our perception and we're bullish on this chart, our anticipation that is that the chart is going to start to go up, then we want to go ahead and take up a long position. And that's why it was called a signal line. Before I get much further, I put this histogram on the chart. I'll explain what it is really quickly. Right here, this last line that's drawn on, it's actually a histogram. It's called the MACD histogram. I want to say, and it's in my chart, in my PowerPoint, I want to say it was developed by Thomas Asprey, and I was correct. I was remembering that detail correctly. But all it is it's the difference between the MACD and its signal line. So when it crosses, it'll drop down below 0. When it's up above, it'll be up above 0. It basically is just the measurement right here between the MACD and its own signal line. So if you're looking at it and you're looking for crossovers, you can just look for the histogram to prop up down below. If you're looking to see kind of momentum hints, you can look at how much distance there is between the MACD and its signal line by looking at either the MACD and its signal line or the histogram. Okay. All right. So that's the MACD. That's what we're going to talk about with the MACD. I already talked about the first main way that you can look at the MACD, and that's by looking at the MACD and comparing it to its signal line. Okay. If it's up above its signal line, you're going to be in a bullish phase, like you were this whole time between. This is almost a year in data. It went bullish November 26th of 2025. It went bearish right here where it started to kind of collapse on 130. So for the better part of a year, it was bullish, and the whole time silver was kind of climbing. Not kind of. Silver is climbing. The second way Gerald Appel talked about in terms of measuring or using the MACD as a tool for looking at the market was as an overbought, oversold indicator. And you want to be a little careful when you're looking at overbought or oversold, in my opinion, in my humble opinion. And I've heard a couple of things in the market before, like the market can stay rational for longer than you can stay solvent. I think that's an important one. But just because something gets overbought or oversold doesn't necessarily mean that it's going to retrace to the mean. It might, but it doesn't necessarily always mean. So when I think of overbought, oversold indicators, whether it's MACD, RSI, stochastics, whatever it might be, I might look at them as an early warning light, but I'm always looking for something else as confirmation because things can be overbought, oversold for a long time. In fact, I've found that if you get into a trend on a stock, it's more likely to stay in a trend than to revert to the mean. So you always want to look for a confirmation. And I like the way that this is worded in MetaStock. So if I open the expert advisor here, I'm going to go view expert commentary. And I'm going to put my cursor right here. Right here. Okay. So right here, this is a commentary window. Let me just recap on what I've done. This is a commentary window, and what it's going to do is it's going to help us analyze the MACD. You can do this to find candlestick patterns, to find stochastics, to find trend indicators. There's about 200 or 300 different systems that are in MetaStock that you can apply like this to a chart. Right now, we're just looking at the MACD expert. So it's going to help us understand and identify what's happening on MACD. And since I've clicked on this bar, it's ignoring all of this data in the future and telling us what's going on right now with regards to silver, SLV. Okay. In terms of the crossover, that's because we had the buy-sell signals, right? We had the buy signal way back here. It's currently bullish and it's trading above its signal line. It crossed above its signal line 42 days ago. So it was bullish for 42 days. I said the better part of a year, not quite true. Since the MACD crossed above its moving average, silver has increased 118%, yay, and has ranged from 109.83 to a low of 47.15. So it's giving us this indication here. Okay, it's bullish. It's been bullish for 48 days, 42 days. And it's raised this much in price. Now, you'll notice, because I'm going to point it out right here, we start to get a color coding of blue. We also had some color coding of blue here as well. What that's indicating is the MACD is in an overbought or an oversold territory. And the way that it says this is the MACD is in an overbought range. Prices may continue to move higher for some time. Wait for prices to move lower before considering any short position. And it is true, right here on silver, we did have overbought, oversold, and it did revert to the mean, but it was also overbought and oversold here. And it was also overbought and oversold here. And it was also overbought and oversold this whole time. So just because something is overbought or oversold, we want to wait to make sure that prices are going to start to move lower. Michael says, I use the MACD histogram as an earlier and better entry signal. Can you backtest when a histogram reverses from top peak or from bottom trough? I can. We can do that. It's not something that I'm prepared to write indicator code right now for, but you can test anything that you want. And Michael, if you need some help getting that written as a test, I believe you use MetaStock. I think. I'm pretty sure you do. Just get in touch with me and I'll get you over to our formulas team and they can help you write that formula. But you can absolutely, as long as you can define it, you can test it in MetaStock. It's a very, very big open toolbox. It's not something that people grow out of all that soon. Okay. Thanks for the question too, Michael. The last thing that we're going to talk about, and the third thing that we're going to talk about in terms of when it comes to interpreting MACD, and the reason I specifically include it in this chart, and you might have guessed it's divergence right here. One of the people I have a lot of respect, and I think his book should be required reading, and I've already mentioned his name, it's Dr. Alexander Elder. He's a big fan of MACD. Well, no. In his book, I'm gonna go back to my PowerPoint so I don't get the actual quote incorrect. But if we come over here, in his book, Dr. Alexander Elder states, divergences are among the most powerful signals in all of technical analysis. When prices, and when we're talking about divergence, we're looking for prices to make new highs and MACDs to fail to make new highs. And I'm going to draw that on the chart. But one of the things that Dr. Alexander Elder says is divergences are the most powerful technical signal in all of technical analysis. But when he comes in and he does demos with us from time to time, he specifically likes MACD divergences. It's one of his favorite signals. It's one of what he calls the most powerful signal in all of technical analysis. So let's draw that on the chart, and I'm going to do my best to draw it in the same way that Dr. Alexander Elder would. He has a couple of rules that are built into it. When he's looking for divergences, he wants the MACD histogram is really typically what he's looking for. He wants to look at it cross down below zero and then make a peak. So make a peak, cross down below zero, and then make a new peak. I'm going to just call this a peak. These are pretty far apart, but we've had a pretty big bullish trend. So right here, we've got a peak. We cross down below zero, we set another peak. Okay. I'm just going to draw a trend line on that. So here's the trend line tool in MetaStock. Here, actually, I'm going to do the measurement tool instead so I can see what the percent change was. So if I drew a line from this line to this line, you call that the peak right there. It's upward. It's up about 1.6 points. Okay. So it's headed upwards. I'm going to look at price and roughly about the same. There's a peak here. I'm going to grab the percent tool here. Here was the peak. Here's the peak there. There's the peak at about the same price. We had a 122% rise in price from here to here, but our MACD is pointed up. That's not divergence. That's kind of convergent. It'd be nice if it was divergence because we did have a big fall off a cliff right here. But what we'd be looking at in the most powerful signal of all technical analysis signals is if price made a new high, and let's see MACD was back here, up here, and it failed to make a new high. So when price made a new high and MACD failed to make a new high, the words and he doesn't mince them. The words that Dr. Elder uses to describe that phenomenon is breaking the backs of the bulls. He calls that a bearish divergence. He calls it the most powerful bearish divergence in all of technical analysis. So maybe you should pay attention to it. So in any case, that's what he's looking for in that particular case. Here's a few things, and I think I'm going to end it there in terms of the description of what MACD does, simply because I'm looking at the time. But there's a few things that I like here. Like, you can visually see where MACD gives a buy signal and where it gives a sell signal, and where it gives a buy signal and where it gives a sell signal and where it gives a buy signal and where it gives a sell signal. You can tell visually right here, this trade was obviously awesome, amazing. This one was probably pretty good. You went short here and you got back in long here, depending on where in this massive bar you bought, right? But you can very, very visually see. And in fact, you could go in and say, okay, well, we opened here at 47, and when we exited it, we wouldn't have gotten out on this bar. It still headed straight up. But on the gap down, we might have, if we got, because we're getting the sell signal too there. If we would have gotten in at 89, we know that that was a good trade. It's objective. Do you see what I'm saying? It's not subjective. And since it is objective, we can know exactly how well it performs. We can see when these areas of choppiness come in. As I said, the disadvantage to MACD is it's very choppy. But since it's completely objective, we're studying the price activity. We can go in and say, how did this work? We can test it. And we can even, one of the power tools in MetaStock is we can ask, how well does this work? And how does it compare to other indicator-based systems, whether it's something that we're using or something that Michael wants to test? Let me show you how that works. I'm going to open up our power console here. I'm going to go to the system tester, and I'm going to make sure I'm going to include these systems here. We'll go ahead and actually add. I want to make sure there's hundreds, so I'm not going to test all of them simply because it'll take a little bit of time. But I didn't mean to do select that many. I am making sure I include ones that are included as part of the MetaStock platform, because you can create your own. There's also a lot of add-ons where people have made them. But what I want to do is make sure I include that MACD system. So we're going to do that. And I'm just going to throw in all the rest of the performance systems as well. So we'll go ahead and do this. The performance systems is just a group of, we'll do Ichimoku too, since it popped up. Okay, let me just select all of these real quick. And we'll go ahead and put silver in here. I'm going to put in a couple more stocks. We'll do Spider. We'll do the SBY ETF. We'll do GLD. We'll do GED. And now what I'm going to say is I'm going to have it go back. I'm going to have it take all the long trades for MACD, as well as all these other systems. I'm going to have it take every long trade, every short trade. I'm going to have it do both. I'm going to have it go back 2 years, about 500 records, and I'm going to have it just tell me which ones work best. I'll have it start with $10,000. I'll have it trade 75% of the account size. I'm going to go ahead and click on OK, because it's going to start now. Okay? And we're going to go ahead and run that. Did I do it? I don't think I did it. Start. Okay, now we're going to run it. It's going to do 4 different stocks. It's going to do several systems. You can see it's chunking through them, but it's basically going and saying, if I took all of the buy signals, all of the sell signals on that particular stock, how well it would have worked. And very quickly, we're going to look at the reports for that. So I'm going to go ahead and view the report. It's already done. It did all 4 whatever the stocks. It did all the systems. You can tell it did pretty good. Right here, I'm sorting this by profitable versus unprofitable. But based on our basket of top stocks, our most profitable would have been the Stark band system. Our least profitable would have been over here. Obviously, as traders, we want to focus on what works and what those indicators that are going to help us. And with MetaStock, we have the ability to test. A lot of platforms can test But I can go in and if I had a few more minutes, we could test the whole S&P 500 and get an idea of not just how something works on an individual stock, but how it works on a variety of stocks, how it works in different market conditions, whether those are bullish or bearish. And what we have is one of the best back testers that are out there. And from just this screen, I can say, okay, this Stark band system, on average, it made about 92% across the different stocks. On average, it only traded once in that 2-year period. That's not a lot of data. I'd want to test more. But its best profit was 25,000, and in its worst case scenario, it lost 80, or it gained 80 cents. So that was pretty good. Okay. We can also look at the derivative moving average. The next system down, it made it 89% over the last 2 years, trading twice on those baskets of stocks. We've got the Arun reversal. We've got the classic. We have the Ichimoku method here. There's actually a really cool Ichimoku system in MetaStock. I do a whole class on it. So from here, we can get an idea before we really learn about a system, how well it works. And if I click on view, it's going to show us the 5 different stocks. This could be 500 stocks if we tested the S&P 500. It could be the optional stocks. You can test as much as you want. This is a power tool. This isn't something that's like available online. This is something that you use to help you understand what's going on, not only just on one stock, because a lot of people do system testing, but you can see how well it works on a variety of stocks. GEV really worked out pretty well with this. It was our best performing one. It made 194% on GEV. And we can even go look at a further down and look at the report, which I don't have time for. So I'm just going to plot it on the chart. And that'll basically open up GEV. It'll show us where we would have bought, where we would have sold. We get an idea of how well. And it did pretty well. We bought here. We had a short here. We lost money on that short. We bought here. We sold here. We bought here. And we exited out because we ran out of data towards the end. So I can see exactly how this works. But I don't think you should use this to skip your education process. We just spent 25, 30 minutes talking about MACD. If I'm going to trade a Arun reversal, I want to understand what it's doing. So I'm going to attach the expert advisor real quick. I'm going to go to that Arun reversal system. We'll go ahead and click on attach. And I don't have time to go through all of the rules, but I want to give you a bit of an understanding of what's going on. Why did we go long on GEV right here? And what I'm going to do is I'm going to open up that same commentary window. I'm going to come back to that day where we got the buy signal, which was right here. It's just going to tell us if we're taking short positions to get out of it and go long. But it's also going to tell us what the system's about. The Arun indicator was created by Tushar Shandy as a mean of identifying impending trending action or impending trading range. The system enters when the 2 Arun indicators are extremes from each other. The signal for the trending action, the system exits when there is a reversal of the conditions. So here it's telling us what indicators are involved. It's telling us who developed the system. And what would be my next logical move for me is I would apply the Arun indicators to the chart from the quick list here, take a look at them, and then maybe do a little bit more research in terms of I want to understand why I'm trading. I know this works really well. It's worked over the last couple of years. If I spent some time in that profit and loss report, I could understand exactly what my drawdowns look like, how many losing trades and winning trades I would have had. But I want to be able to be disciplined, like we were talking about at the first of the thing. So I want to understand why I'm trading. And I don't want to necessarily learn about all 300 indicators in MetaStock. That sounds like a lot. Or even all the 300 systems. I just want to understand what works for the stocks that I'm interested in, for the risk tolerance I want to have, for the drawdowns I'm willing to take, for the risk versus the reward that I'm looking for. I want to find something that works. And then I want to learn about it. And that's one of the reasons I believe that we've been rated #1 in our price category for 33 years in a row. The other thing is nobody does scanning like us. So if I like this Arun indicator, I can come in here. We call it the Explorer. I'm going to click on it. I'm going to look for that Arun indicator. Right here. Oh, it was the reversal signal. Okay. I can run a real quick scan. I'll go ahead and start this. I can say, hey, out of these stocks that I'm interested in, and this could be the whole universe, which ones have a buy and sell signal today? What always amazes me is how many people look at 500, 600, 700 charts a day. I don't have time for that. I work a lot. I have a busy home life with a lot of kids, with kids and responsibilities. And what I want to do as a trader personally is I want to focus on the methodologies that work. I want to focus on the stocks that are giving buy signals that have an opportunity. And what I want to be able to do systematically is avoid the noise. So this will finish. What it's going to come up with is it's rejecting about 99% of the stocks. Go ahead and cancel it right now. And so it did come with Edison for that had a buy and sell signal. And it would have, I only let it go about halfway through because I want to talk about the trial that we're going to offer. But very, very quickly, we're going to be able to not only tell you what works, help you understand why it works, what it does, and then identify opportunities. And we only have really enough time to scratch the surface. Like if you wanted to be able to scan for stocks that are breaking out, there's a scan for that. If you wanted to scan for a stock that had the best performance, you can scan for that. If you wanted to find stocks that gapped overnight, there's a scan for that. One of the things I've loved about MetaStock over the years is it's not a platform you're going to grow out of. It's been rated #1 in its price category for 33 years in a row. This slide's outdated. We just won the 33rd year. So, so need to update this one. But one of the reasons that I see all these software programs that come, that go, they don't have very much capability, and people just grow out of them. They want to be able to scan. They want to be able to improve what they're doing, and very quickly they realize that what they might be using doesn't have the capabilities. This is a software that's mature. We've been creating it. We've been working on it. It's been in work since the 1980s. And that's why it's been rated 33 years in a row the best. That's why we have so many traders that have been using MetaStock year after year. We have traders that have been using MetaStock since before I started, 30 years ago. It's a great tool. I use it myself. I use it all the time. So it's a big toolbox. It does a great job of helping you scan for identify stocks that have an opportunity. We talked a little bit about the tester, not a lot. The forecaster, it's a really well-rounded toolbox. You're not going to grow out of it. We have two different versions. We have a real-time version. The real-time version is powered by Reuters News and LSEG data. It's about $265 a month, and it's full real-time. You do have to pay some exchange fees if you want real-time data, but it's $265. If you're familiar with what it costs to get real-time Reuters News, that's a bargain, and it includes MetaStock. If you don't need the news and you're okay with the MetaStock delayed, you can get MetaStock, the daily charts. It's updated on a 15-minute delay. It's like $75 a month. And we do have a special that we're going to offer. I just wanted to highlight a few of the things that are included, and there's a gap identification system. There's all kinds of methodologies that have been time tested and proven that work over the years. We have a fantastic support team. If you have questions, you can call in, you can talk to a person, you can chat in, you can chat with people. They get 100% on a lot of the ratings that they get back. Sometimes they get 100% for the whole week from all of the people that review. Great people. And a lot of them have been here a long time as well. We have an employee retention rate of about 14 years, I think is the average. So you get free unlimited access to that. We have trainings to help you get started. We'll even have somebody sit down and walk you through the program. So what I'm going to offer you today to try out the highest rated software in the last 33 years is a buy 1 month and get a 2-month free trial. If you do that, you'll pay $75. That's $25 a month for the DC version. You'll be able to evaluate it. If it's not helpful for you, you just cancel your subscription. There's no commitment to keep going with it. But during that 3-month trial, we'll sit down with you. We'll give you support. We'll give you access to all of the training videos. And I really hope you do it. I love MetaStock. I wouldn't trade without it. And so many of the people that I've talked to over the years have just been using MetaStock for years and years and years and decades at this point. So if you have questions, if you want to get more information, you can give us a call, 800-882-3040. We'd love to talk to you. You can chat with us at metastock.com/saleschat or metastock.com, Festival 3 for 1. It's time for me to go.